Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Tuesday, January 15th, 2025. It is 3:35 p.m. Eastern Time, so we've got about just under 30 minutes left in the trading day. I wanted to get a quick one out to you. Really not much to add. The breakout in treasuries happened. We had those bullish falling wedges, which were, pretty much potentially explosive patterns. That's exactly what you want to see on a breakout, impulsive move up. And of course, stocks are going to go with it. So again, to reiterate, we've had, positive divergence on the risk assets. Stocks, both the S&P 500, the Nasdaq 100 have been highlighting that. The case to be long there for, the near term. And then also Bitcoin, other risk on assets, and they're all, doing well today. So as far as TLT goes, we hit that first target this morning, right there. I give you a first target zone. I was lucky enough to get filled at 112.290 on a reversal trade, because you expect a reaction on the initial tag of a resistance level. I think the high was 112.300. So good exit game to, it's nothing much. This is active trader stuff, 0.5% pullback, re-entered, also game the pullback, the first pullback today. Actually two, I'm either 2 for 2 or 3 for 3 on just gaming the little zigzags. I'll show you when you get to the shorter term charts on NQ, the Nasdaq 100 futures. But either way, the breakout's legit. And of course, as long as it holds, anything's possible. But I expect more upside to at least this area here. We'll zigzag up most likely. That's ZB again. That's the 30-year. If you look at the 10-year, which is what the market watches closely, you have that rally right in. I've added this level here. It's comparable to the level I had for you on ZB, the 10-year bond. And you can see it was support, broken. We back tested from below. So that's a logical first stopping point. I just want to say I'm going to get to the equity. Well, I'll move to the equity markets next. I just, right before this video, kind of took a gut shot. I'm going to see if I can go 4 for 4 or 3 for 3. I forget what it is on NQ trades today. I think they're going to fade it into the close. It has all the makings of a trend day. That's when the market opens up and continues higher all day and close at the highs for the day. But I think we'll see some profit taken today, even though we're still shy of my those downtrend lines that I've been targeting on the ES, NQ, SPY, and QQQ. But the way, like I said, this breakout's legit. Any pullback to backtest the trend line would offer an objective entry. I don't think we're going to get that. We could, certainly possible. Anything could happen. I mean, the breakout can fail. But this probably has trapped a lot of short sellers into treasuries today. And so, again, maybe a little breather here. And it's simple stuff. The next buy signal comes on a break above these resistance levels, these first targets on ZB and NQ that we hit today. I will get to the bonds, the ETFs in a second. I know that not everybody trades the futures. That's just kind of what I trade mostly, and also kind of gives you that perspective of what's going on around the clock with futures trading, nearly 24/7. I'm just looking for ZB one more time before I wrap up and move to the equities. There, that level. So same story. ZB has to pop above the top of the first resistance / target zone there, and that should open the door to move up here, at least to that 115, 160. So plenty upside left. But one of the bigger days, and again, treasuries usually, 1% move in the long bond is pretty much a pretty good move. We were up better than 1.5, north about 1.7 or something percent today. So that gets to be, stretched for a daily move. That's another reason why we had the reaction there at the first targets. Let me show you the equity markets. I've got a lot of charts. So this one's a 15-minute chart. I told you when the markets are conducive to active trading, as they have been recently, 5-minute charts, 15-minute charts, even the 60-minute charts. Those are my go-to swing trading time frames. You can see if this one here, I have a lot of different boards marked up on NQ, different charts, but that was, divergent high. That was a big divergent low. This was the same divergent low on the 60-minute charts I'll get to in a second. Reason for being long and bullish lately. You get these little small divergent highs, small divergent lows on this short-term time frame, and they're usually good for these turns, if you will, to game these if you are an active trader, that was a divergent low. So just to mark it here, this was a divergent low. You got a rally, that was a divergent high. You had a correction, that was a divergent low. You can see there, and this is a divergent high. Hence why whether they fade it, whether they buy it into the close or park it up here today, I think there's a good chance you'll see a correction tonight in the futures, this evening, after hours, into maybe into tomorrow, and then continue on up. I'm still looking for a move likely to these uptrend lines, which also we're getting kind of close to now. We're already, what is that? Just eyeballing it. That's got to be 3/4 of the way there. So the RR, the risk reward, is starting to become less favorable now, increasing the odds for a pullback. And let's not forget we had some pretty powerful, decent sell signals on the daily and weekly charts recently. So you're going to see, I would suspect, some profit taking soon. And so again, that's to me enough for today. I think the bulk, if not all, of today's gains have been milked out of this market. And so that's, again, just the active trader, me looking to get a little pullback here. And I'll kind of play it by as it goes until I decide to shut down for today. Let's give you a couple other charts here. I'll get to the indexes, index ETFs in a second. What is this one? This is NQ hourly. That's not the one I want to give you. I want to give you a 6-month here. There it is. Okay, so we are getting close. There's that downtrend line I've been targeting right there. And again, close. Is it worth trying to milk that last little bit out? I prefer to get back long if we're going to hit make a full tag of the trend line on a pullback first. Also, pretty nice resistance there as well. That was also, it's been a target zone. And there's the divergence all the way on this 120-minute chart, meaning 2-hour candles. And then to go back to that other one, that was the 15-minute chart where I'm showing you the divergence there. You can see it on the 5-minute chart too, right there. There's a divergent high right there, a little minor trend line. I don't have it all. Normally I can just look at this and see the divergences and trade them, but I'm drawing them out for you here. So you can see this is, the short, typically. I shouldn't even say that. I often trade the 1-minute chart as well, kind of hone in on entries and exits there. But for the sake of these videos and all that, I'll go down to the 5-minute chart. So that's it. Let me give you the ETFs. I told you I would do it for the bonds too, TLT, just so you know if that's what you're trading. There's the breakout right here and the gap up today. And again, you don't see futures, you see the move. Here, you don't see the move because it happened before the market opened today, and that's where a futures trader had plenty of opportunity to get in there. And it was a quick move up, of course, on the CPI report, and there's that first target, which again was hit today. Clear that, we'll go up to the next targets there. So let me go to QQQ for you ETF traders. 5-minute chart, you can see the again 5-minute divergent low rally. This is a divergent high. You don't see some of the, I showed you on the futures a minute ago, other divergences that you don't see here. Again, because the futures get that kind of round-the-clock trading, and it just gives you more visibility on the charts and more opportunities too. One of those being, there's so much liquidity in the futures, even in the after-hour session where QQQ, if you want to trade it in after hours of pre-market, limit orders. And they can be a pain in the ass, especially if things are moving. You put a limit order, you miss your fill, you got to cancel that, redo the order, change the price or modify the order. Or futures, you get the liquidity, you can just use market orders, easy to get in, easy to get out. This is, again, a 5-minute chart. There's the downtrend line here. Go to a 15-minute chart. There it is right there. And you can even see the divergence is starting to form here on this 15-minute chart of QQQ. So again, it's just kind of my read on the charts. Get a pullback. Where to? I'd love to see it all the way back here. I don't know if we'll go back that would be basically to the top of today's gap. This is the gap right here. That's yesterday's close, today's open. There's your gap. A test to the top of the gap. I'm not looking for a gap backfill right away. That would be a nice place to close a swing short or active trading short, and then cycle back in for another long trade up to that trend line there. Also SPY, you have the, here, I'll draw it here. Let's get rid of that tool. Draw a little 5-minute divergence, small one, coming off a much bigger divergent low right there. This is a 15-minute chart. I'm sorry. Here's 5-minute right there. There's a 5-minute chart right there on SPY. You can see that little divergent low, and then more of a longer-term time frame. There's your the uppermost downtrend line, but I have on the futures. I also have this one drawn right here. That's a secondary. That's comparable to the QQQ downtrend line. So this is the one we'll probably have a reaction. So again, I see if it happens today, minimal upside before you have a likely get a pullback here. And so that's why I'd rather not miss the turn, get in a little bit early. Plenty of room to add to this current short. And again, closed out, it's pressing the longs pretty heavy today because with that breakout in treasuries, I had virtually 100% confidence it would be a good day in the stock market. So those are the days you can go push the NQs pretty hard or whatever you're trading. At least that's how I like to do it. All right, let's give you what else? Natural gas still looking very good up to my the target's 490. Let me go to NG here and just show you. This is, let me grab the right chart, the long term. Okay, this is the long-term chart, my weekly chart, and nat gas on stock charts. This is the continuous futures contract. So forever and a day, I've been highlighting this divergent low, being longer term, making the case for a significant bottom, not just positive divergence, but positive divergence at support, not just support, the low end of the range. Again, natural gas, they're not going to give it away free. Okay, so you can see in recent years, about as cheap as it gets is about $1.50, right? And I've measured and covered this chart many times. 222% rally off that divergent low, 160% rally, 234, 207, 526, 563, I'm sorry. And now through yesterday, this is an end of day charts. That's yesterday's close, about 200%. So we're right about in probably at the low end or right about, it's definitely the low end of the average. Again, I just read them all out to you. You can do the math on it. And so this coincides, meshes with my target, which again is just shy. It's actually around 490. So I plan to cover or close and likely reverse natural gas if and when it gets there. I've also been, like the stock market, actively trading, sidestepping some of the bigger givebacks when the opportunity was there, the big rips. But overall, still have a core position and long across all accounts in it. And this is where we're getting very close now. Remember, this is an end of day chart. Right now we're up today another 4% from where we closed yesterday. We're at 413 and a half right now. Actually, there it is, because that was yesterday's close, 397. So we're coming up there. Crude oil. Let's talk crude oil. Crude oil is it continues to run. I have added to this one. I've given this one more room than I usually would, only because I'm firing on all cylinders on other positions right now, and with some really nice gains. And so what I've actually done is added to crude. This is the March contract. It has a little more volume right now than the February contract. I actually have both. I started opening this one today. I'll be rolling the Febs. So I'm going to show you this one. They look similar. Big divergence here. This is a 60-minute chart, my go-to swing trading time frame. Big negative divergence. This looks very much like a blow-off top, buying climax, this kind of swift move up. And it's also right into the $80 range, you guys. That's typically, it's often a resistance level on crude oil. Not to say it can't go through there, but that is a long term here. I'll show you. This is it's probably better on that other longer term chart I had. Let's see, daily here. Let's go back 2 years. You can see right here. This tends to be about where, with a few exceptions, where crude usually will stall out after a big run up, like this run up here and this run up here. I'm going to go ahead. I'm just going to cap it here. Look, wheat, corn, all those commodities still look good. In fact, everything. That's the key of this. Let me just cover one last thing. Commodities are looking good. Been bullish and long commodities for a while. Both its core holdings, everything else highlighting that. DJP is one that I've covered many times in the past as my using this to predict where the CPI would come in. So, somebody asked me a couple days ago, because we had, both CPI today, it was a PP the other day, and Randy, you worried about the PPI coming in hot, or the PPE or the CPI. And so, I said one thing: if there's a big market moving report, like a big Fed meeting, whatever, certainly you can lighten up into that. But my reply was, and you can check that on the site, it was just a couple of days ago, that there's always a report. Every week we have economic reports, and you'd never trade if you're always worried about the next report. And so my answer was, all you can do is go off the charts, and the charts are indicating stocks were going to rally. So that would assume that whether the CPI was hot or not, that the market would shrug it off and rally. So that's what happened. Now with this, where I was going, I also suspected the CPI would not come in hot and scare the market. This has been it's been very accurate in predicting. Commodities are a big part, especially oil, of the CPI, but it's not everything. I understand that. Housing markets, that data's lagged, but this is the best real-time indicator. If you look at crude oil as well as this general commodity tracking ETF like this, or ETN in this case, you can see this is the month of December. So this is the what was just reported. Now, this is what the market's going to take note right here. But that report comes out a month from now, right? So we don't have to worry about that. And I'll watch this. If this happens, remember, I have those zones on USO, just like I have on Treasury bonds, and I've had for since early last year. And those zones are red. We've just entered the red zone today on USO, right? Again, that goes back here. We entered the orange zone back there. The stock market took note both times. The red zone is where the market will really start to take note. Now, USO does a good but not perfect job of tracking crude prices. Keep that in mind. This is an ETN, so it's doing its best, but it has expenses and fees, and it's rolling different futures contracts. And so, you also want to keep an eye on WTIC, West Texas Intermediate Crude, CL crude futures. And I just want to point that out, that this is getting really hot. But also, that's resistance. You can see here on the 60-minute chart, nice negative divergence. So again, this is a trade that I expect a nice correction to come soon in crude. And look, if it doesn't, it's going to impact the stock market. I promise you, if crude continues at the rate that it's climbing, you just go another, a few days of the gains that it's having. If another 5, 6, 7% from here, the market's gonna really put the brakes on the stock market. So that's why right now, at this very moment, I'm short for the reasons I told you earlier in the beginning of the video, and we'll see if we get a little fade into the close. Here it is. Since the video started, we started to move down. Got 6 minutes to go, and I think they'll sell it down in the close, some profit taken, and then we'll pick it up tomorrow. All right, let me get the video out to you. This has been Randy Finney with the right side of the chart. Have a great day.